So guys, here's a quick revision of branch accounts. Remember, this is not a replacement for your preparation. This is only to recall all the minor points of the entire chapter. So I said the objective of this chapter beta was to determine the profitability of the branch so that you can evaluate whether you should continue with the specific branch or not, or should you be making additional investments in a branch, and how should you be paying remuneration beta to the person who's running the show at the branch level, performance measurement के लिए. For this purpose, branches are segregated into two categories. We have domestic branches and then we have foreign branches. If you have a place of operation through which business is being conducted within the country, it will be referred to as a domestic branch. If that place of operation is outside the country, it will be referred to as a foreign branch. Domestic branches are further segregated, guys, into dependent branches and independent branches. This classification is based on who's maintaining books of accounts. If the entire accounting of the branch level is being done at the head office level, you will be terming it as a dependent branch. If the entire accounting is being done at the branch level itself, you will be referring to it as an independent branch. Normally the branches that we see as such, guys, out here will be dependent branches. At the branch level, there will not be any detailed accounting done. They will only be maintaining inventory records, sales records, cash and receivables and payables. All the expenses will be paid by head office. Expenses are not directly incurred at the branch level. Are we clear? Anyways, depending on accounting, you divide those branches better into dependent and independent branches. Foreign branches are segregated into integral and non-integral foreign operations depending on the decision-making power that is being given to the foreign branch. If the foreign operation is considered as a mere extension of the head office, where head office takes all the decisions, branch is merely involved in receiving goods from head office, selling those goods at the local level, remitting funds to the head office, then it will be classified as an integral foreign operation. It is as if head office itself is entering into all of those transactions. It is not the branch that is entering into those transactions. On the other side, beta, a non-integral foreign operation beta is one where the branch will take all the decisions in relation to its day-to-day operations. Whatever funds are required for running the show will be raised locally as such, guys. They will be manufacturing goods or they will be purchasing goods locally. They will sell goods. They will manage their own funds, pay their own expenses. Once in a while, whatever are the surplus amounts left will be remitted to head office. Remittances will not be made to head office on a daily basis. The accounting, guys, whether it is domestic branches, whether it is foreign branches, will all depend on this classification first. So it is very important to identify whether it's a dependent branch, independent branch, or whether it's an integral foreign operation or a non-integral foreign operation. As far as method of accounting is concerned, guys, for dependent branches, if goods are invoiced at cost or at invoiced beta at cost plus markup, we have three methods under which we can ascertain the profitability of the branch. We have debtors method, stock and debtors method, and memorandum trading and P&L account. If goods are transferred at wholesale price, then we have wholesale price method. Now, under debtors method, stock and debtors method, and memorandum trading and P&L account, whatever is the difference between cost to head office and the selling price at branch. If head office is buying a product at 100 rupees, it is transferring that product to branch at 120 rupees and the branch is selling it at 150 rupees. Under all the three methods, guys, debtors, stock and debtors, and memorandum trading and P&L account, the entire 50 rupees difference between cost to head office and selling price at branch will form part of branch profits. Under wholesale price method, guys, head office is going to record its own share of profit, branch is going to record its own share of profit. So head office will record a profit of 20 rupees, branch will record a profit of 30 rupees. That is under wholesale. This first difference you should know between these three methods and wholesale price method. Now, starting with debtors method, guys. Under debtors method, your branch is considered as a external party, as a debtor. That is why we only record transactions that occur between head office and branch. Any transaction that does not relate to head office and is occurring at the branch level will not appear anywhere in your branch account. Example, if there is sales occurring at the branch level, it will not appear in your branch account. If there are purchases made by branch directly, it will not come. If there's discount allowed, if there's discount earned, if there are bad debts, if there are expenses paid by branch directly, nothing will appear beta in your branch account. The only thing that you record as such beta are the transactions between head office and branch. Of course, apart from that, you will have to record all the opening balances of assets and liabilities and the closing balances of assets and liabilities. Mandatory to record because those are the balances that the head office has to receive from branch. So the common transactions that will appear better in your branch account is goods sent to branch, goods returned by branch to head office, remittances by branch to head office, remittances by head office to branch, and expenses of branch directly paid by head office, or amounts paid by head office for the purchases that are made by branch. As long as the transaction relates to branch and it is between head office and branch, it will appear in your branch account. Otherwise, it will not appear in your branch account. So the format that I gave beta for your branch account, this covers a detailed format. If you look at it beta, first you will have to mention all your opening balances of assets and liabilities. So that is why when we start branch account, two balance brought down beta, you will have branch furniture, branch cash, branch debtors, branch stock, branch prepaid expenses if any. The normal assets that you will see beta is branch fixed assets, branch stock, branch cash, branch debtors. ये normally रहते हैं. इसके अलावा they can also be branch prepaid expenses. Branch stock will be disclosed at invoice price. But because the objective is to arrive at overall profit, you immediately reverse the markup on that by writing it on the credit side beta as by branch stock reserve. By balance brought down beta, you should have all the opening balances of liabilities. You will have by branch creditors, you will have by branch outstanding expenses. We did not see creditors in any question, guys. Outstanding expenses, opening balance nahi tha. There was only closing balance in one of the question. Prepaid expenses nahi tha. इसीलिए मैं बोला that normally you will only see debtors, stock, cash and fixed assets, and of course beta the amount of markup included in that. Whenever there are goods transferred by head office to branch, you always record at invoice price first and then immediately reverse the markup on that. Likewise, if there are inventories returned by branch to head office, you will record it on the credit side, guys, at invoice price first and then immediately reverse the markup on that. You will have to then record beta whatever are the remittances that are made by head office to branch or made by branch to head office. Once we do that as such beta and write the closing balances of assets and liabilities, branch account will automatically end up resulting in profit. So if you're not accounting for discount allowed to debtors, guys, do not worry. The cash that is being remitted to head office is reducing, balance of debtors is also reducing, so indirectly you end up recording discount that is being given. If there are expenses paid by branch, guys, we are not accounting for it, but don't you think the remittance that is made by branch to head office will automatically reduce? So we are automatically accounting for that payment. How will you account for depreciation? Opening balances before depreciation, closing balances after depreciation. The difference between opening balance and closing balance will automatically result in depreciation. By recording these, you will automatically end up arriving at profit. What is most important beta in all of them is the treatment of normal loss and abnormal loss. I will cover that after I talk about stock and debtors method. यहाँ तक सब समझ में आ गया debtors method? Yes or no, kids? Now moving to stock and debtors method, guys. I said under stock and debtors method, this one single account, branch account, is again. Now, guys, sorry, one point. Even under debtors method, we will have to prepare branch debtors, branch cash as a working note because it is mandatory for us beta to arrive at the closing balance of debtors, closing balance of cash. Are we clear? Agar petty cash balances hai beta, you will have to maintain petty cash separately and main cash separately. If they do not give us closing stock, then what do we assume? All the sales have occurred at normal invoice prices. That is how you will have to compute your closing stock. If it is not given, we will have to compute it using the details of opening stock, goods sent to branch beta, and by assuming that all the sales have occurred at normal prices. Are we clear about it, Mohit? Now, under stock and debtors method, we are again dividing this single branch account as such beta into multiple accounts. You will have branch stock account which talks about or which basically beta deals with the entire movement of inventory, inflow and outflow of goods. Branch adjustment amount is the markup on branch stock. इसके पहले in a single account beta we used to write goods sent to branch, we also used to write the markup on that. Now what are we doing beta? We are writing invoice value of goods in branch stock account. The markup reversals on that beta are occurring through branch adjustment account. The most important accounts beta under stock and debtors method is branch stock and branch adjustment. क्योंकि as working notes बेटा even under debtors method you know how to prepare branch debtors account, branch cash account. उसके अलावा we prepare branch expenses account, branch fixed assets account, branch P&L account, and one extra account called GSTB which comes under debtors method also. Now talking about branch stock and branch adjustment account, guys. If there is opening inventory under debtors method, you will write 2 balance brought down में branch stock, and immediately on the credit side what will you write? By balance brought down branch stock reserve. अभी क्या करोगे बेटा? Opening value as such, guys, will be written in branch stock account. The markup on that as such beta will be written in your branch adjustment account. If there is goods sent to branch, guys, you will write that value beta on the debit side in branch stock account. The reversal of markup on that will be in credit side of branch adjustment account. If there are goods returned by branch to head office as such, guys, you will have to reduce the stock of branch. So you will write branch stock mein beta by GSTB. You will also have to reverse markup on that. Are we clear? But because you are maintaining multiple ledgers, guys, you will record every bloody transaction that is occurring at the branch level. Under debtors method, we were recording only transactions between head office and branch. If there are cash sales being made, I will reduce branch stock by transferring the balance to branch cash account. If there are credit sales being made, I will reduce branch stock by transferring that balance to debtors account. Are we clear about this? Yes or no, kids? Not necessary, guys, that every sale should occur at normal invoice price. If every sale is occurring at normal invoice price, no problem. The balancing figure of branch stock account is your closing stock. The markup on that beta will become the closing balance of branch adjustment account, and the balancing figure of branch adjustment account, guys, will become your gross profit that will be transferred to your P&L account. But if sales do not occur at normal prices, then branch stock account can have a balancing figure. But for that beta, they should give us closing stock. If closing stock is not given, assumption every sale has occurred at invoice price. There was this one question in which they specified beta that cash sales were occurring at this price, credit sales were occurring at this price. In that question, we know what is the amount of excess markup. Uske baad mein beta we computed what was the amount of losses that we have. So if you know the selling price, you can compute excess markup. After that, you may have losses in inventories. So it will all depend. If you do not know closing stock, simple equation. All the sales at normal prices, closing stock is the balancing figure. If you know the exact selling price as such beta, you will be able to compute closing stock, you will be able to compute losses, you will be able to compute excess markup as well. Whatever is the amount of excess markup or deficit in markup, you will transfer that from branch stock account to branch adjustment account. Reason beta for this is that branch adjustment will disclose the entire amount of gross profit. जो भी तुम्हारा gross profit आना है, that will be disclosed by branch adjustment account. If goods are transferred by head office beta to branch at cost, then there's no branch adjustment account at all. Every inflow of good, every outflow of good will be directly recorded through branch stock account. The balancing figure of branch stock account itself is your gross profit, which will be directly transferred to P&L account. Are we clear, guys? All the expenses incurred, you will have to debit to branch expenditure account. Doesn't matter who's paying for it. It can be paid by head office, it can be paid by branch. If there are any bad debts discount allowed, you will directly transfer them from branch debtors account to branch P&L account. Are we clear about this? Yes or no, guys? Now, talking about normal loss and abnormal loss. Normal loss beta is supposed to directly impact the amount of your gross profit. Abnormal loss beta should not impact your gross profit. It should directly impact your net profit. That is why, guys, एक second, let me just move to that one. होगा ना कहीं तो. So I told you, but if there is any amount of abnormal loss, objective will be to remove it from trading account so that it does not impact your gross profit, and then you debit that beta to your P&L account. If there is normal loss, there is no entry that should come in trading account so that it automatically impacts your gross profit. Yes or no? Now, problem under stock and debtors method beta is that stock is in one account, gross profit is in other account. That is why if you have normal loss as such, guys, you're supposed to remove the entire normal loss from branch stock account and transfer it to branch adjustment account. This is being done only because gross profit is being given by an other account. If branch stock account, branch adjustment account are combined, then there is no entry at all beta for normal loss. So if there is normal loss, under debtors method, no entry, because every bloody profit figure is being given by a single account. Under stock and debtors method, what will you do with normal loss? Entire invoice price remove from branch stock account and transfer it to branch adjustment account. In case there is abnormal loss, you will have to first reverse the markup of abnormal loss by reducing it from branch stock account and branch adjustment account. Thereafter, the cost of abnormal loss will be transferred from branch stock account to P&L account. P&L account, branch P&L account. I repeat, if there is abnormal loss, first reverse the markup. Reversal markup matlab reduce the markup from stock account and adjustment accounts. If the total amount of, ये देखो बेटा, यहाँ पे example में the total invoice price of abnormal loss was 1500, markup on that was 500. We reduce markup of that beta from branch adjustment account. You will reduce it from branch stock account. बचा हुआ 1000 rupees will be transferred to your P&L account. If it is normal loss beta, the entire 1500 would have been transferred to branch adjustment account. Are we clear about this? Understood beta? Normal loss, abnormal loss. Under debtors method, normal loss no entry, abnormal loss also no entry actually, because a single account is giving us net profit. From where will I remove? From where will I debit? But what was that I told you in the class beta? Unless otherwise given, under debtors method we assume that the impact of abnormal loss will be borne by head office. That is why you will have to remove the cost of abnormal loss from branch account. Thereafter it will automatically get transferred to head office P&L account. Are we clear about that? So normal loss, under normal loss beta, what will you do under debtors method? No entry at all. Abnormal loss, remove the cost of abnormal loss. What is the implied assumption here? We are transferring it to head office P&L account. Stock and debtors method, normal loss क्या करोगे? Remove the entire invoice value from your branch stock account and transfer it to branch adjustment account. Abnormal loss, first reverse markup. Thereafter, the cost of abnormal loss will go to your branch P&L account. That's it guys, nothing else. Abnormal gain I to be similar treatment. Most important is trying to figure out whether we have abnormal loss or not. That will all depend on the information given in the question. Are we clear guys? After that beta we moved on to memorandum trading and P&L account. I said why yaad method hai, kuch nahi hai. Under memorandum trading and P&L account you will directly record everything at cost. Even if inventories are being transferred at invoice price. Profit beta under all the three methods should remain same. Profits cannot change. So memorandum trading and P&L account is like your standard trading and P&L account. Nothing different. Record everything at cost. Are we clear beta? This was about the accounting under dependent branches. Dependent branches में we directly record the entire amount of profit as a part of branch profit, क्योंकि branch वालों को मालूम भी नहीं रहता बेटा what is the cost. We directly remit invoice value of the goods to them guys. They do not even know what is the cost at which head office is procuring those goods. Their only job beta is to sell those goods, realize money. We moved on to wholesale price method beta after this. I said wholesale price method guys will be used if and only if the question specifies to prepare branch stock reserve account, or they use the word wholesale price in the question. Yaad hai beta? Second requirement of these questions used to be compute branch stock reserve account. Yes or no? So under wholesale price method guys, the difference between cost to head office and wholesale price will form part of head office profits. The difference between wholesale price and retail price at branch will form part of branch profits. The objective is to decide whether it is beneficial for you to run your own retail branch, or should you directly sell it to an external wholesaler. You can make that profit even by selling it to an external party. Why the hell will you want to remain in business of retail also? Are we clear? That is the intention here. So whenever we are preparing profitability of the branch under wholesale price method guys, there is no reversal of markup in that trading and P&L account. You will directly record inventory at invoice price. इसका corresponding profit कौन record करके बैठ रहा है? Head office is recording the corresponding profit on the transfers that are being made. One thing that you should know beta is head office will have to provide for unrealized profit stock reserve. Why is this coming? If there's any inventory that is being transferred guys by head office to branch, and the inventory is lying unsold at branch, head office has already booked profit on it. That is why it will have to reverse that profit beta without yawning at the year end, and that is done through unrealized profit. Whatever unrealized profit that we have on opening stock, you will write it on the credit side of trading account. Whatever unrealized profit that you have on the closing stock, you will write it on the debit side. और कुछ नहीं है बेटा यहाँ पे. Are we clear? This was about wholesale price method. After this beta we moved on to independent branches. What we did learn beta under independent branches? First, एक second. Let me come to that. So under independent branches guys, branch is going to prepare their own books of accounts. Head office is going to prepare their own books of accounts. However, at the year end, your objective will be to present financials of the entire organization. For that, you will have to incorporate all the financials of the branch, guys, in the books of head office. To incorporate all the financials of branch in the books of head office, first we will have to reconcile the balance of head office appearing in the books of branch with branch balance appearing in the books of head office. After that, you will incorporate. So we have learned how to reconcile balances and how to incorporate the branch financials in the books of head office, and also how to present branch P&L account, trading account. Are we clear, guys? Now, for this beta, we have learned about different journal entries that will be passed in the books of head office as well as in the books of branch. We'll quickly go through these entries beta. Remember, we do not have to use the word branch debtor, branch cash, branch stock anymore, because branch is maintaining their own books of accounts, head office is maintaining their own books of accounts. We will add the word branch only at the year end, when branch is incorporating all of those balances in the books of head office. Otherwise, the word branch will not be used. When we write goods sent to branch, branch will write goods received from head office. So the first entry beta here was for goods sent to branch. For head office, it is similar to sales. For branch, it is similar to purchases. That is why head office beta will write branch account debit to goods sent to branch account. Branch beta will write goods received from head office account debit to head office account. If there are goods returned, reverse the above entry. कोई reversal of markup नहीं है बेटा, याद रखना. This is exactly similar to wholesale price method. Head office will record its own share of profit. Branch will record its own share of profit. If there are goods returned beta, there will be reversal of the entry. If there are goods transferred from one branch to another branch, a branch beta will not open an account of an other branch. So if a branch is transferring goods to another branch, for them it is as if the goods have been returned to head office. So whichever branch is transferring those goods, it will record it like returns. Whichever branch is receiving the goods, it will record as if the goods have been received from head office. In the books of head office, you will have to pass that adjustment entry beta. You will debit the receiver, you will credit the giver. So if branch 1 is sending it to branch 2, you will write branch 2 account debit to branch 1 account. Is that clear? After that beta, if there are any purchases made by branch directly, nothing will come in head office books. Branch will directly record those purchases. However, if purchases by branch are paid by head office क्या लिखेगा बेटा? Branch account debit to bank account. Head office will not record purchases. Head office will only record branch account debit to bank. The purchases will be recorded by branch. You will write purchases account debit to head office. I told you beta, in all of these entries, go by common sense. Check where the ledger account should come and check whose cash is going out. Uske baad mein beta, they will write each other's name. Yes or no, guys? So here, if purchases are paid by head office, the bank balance of head office will reduce, but purchases should come in the books of branch. After that, let them record their own names. So likewise beta, if there are any expenses of branch paid by head office, expenses should come in whose books? Branch books. Whose money is going out? Head office money is going out. After that beta, let them write each other's name. If there is collection made by head office beta from branch debtors, whose debtors should reduce? Branch ke debtors should reduce. Whose bank balance is increasing? Head office bank balance is increasing. Let them write each other's name after that. It will continue like it. Are we clear, guys? One thing that you should know better is in relation to fixed assets. I said for fixed assets as such, guys, there are two things. Either the fixed asset account can be maintained by branch, or the fixed asset account can be maintained by, irrespective of who's maintaining fixed asset account, but at the year end, depreciation should form part of branch profits only. It cannot be included in the profits of head office. So if fixed asset account is maintained by branch as such, guys, and they are purchasing an asset, no entry will come in the books of head office. The branch will record branch fixed asset account debit to bank account. If head office is purchasing the asset beta, even then fixed asset account should come in the books of branch. Whose money is going out? Head office. उसके बाद में एक दूसरे का नाम. Depreciation will be directly recorded by branch itself. But what if fixed asset account should be maintained by head office? Irrespective of who's purchasing it, branch fixed asset account should come in the books of head office. If branch is paying for it, you will reduce bank balance of branch. If head office is paying for it, you will reduce bank balance of head office. At the year end, depreciation as an expenditure will still be booked by branch. Just remember that. Are we clear, guys? Now, the most important beta I told you for adjustment entries as such, guys, is goods in transit and cash in transit. If there are any in transit items as such, guys, at the year end, who should record it? The one who's at the receiving end should record such in transit items. So usually for goods in transit, branch will be at the receiving end. Usually for cash in transit, head office will be at the receiving end. So for cash in transit, head office will record cash in transit account debit to branch account. For goods in transit, guys, branch is going to record goods in transit account debit to head office account. Are we clear? If there's any loss in transit which the branch manager refuses to accept liability for, then beta, the head office will have to record that loss. I gave you a long list of entries as to what happens beta. I said, but in exam you have to mention one simple entry. That is loss in transit account debit to branch account in the books of head office. Nothing else will be required. Are we clear? Common questions for independent branches will be reconciliation entries only. They will give you a list of few transactions, ask you to reconcile past adjustment entries के साथ बेटा to reconcile the balances. Is that clear, guys? उसके बाद में बेटा what we have learned is how to incorporate the balances of branch in the books of head office after you have passed this reconciliation entries. In order to incorporate assets and liabilities, guys, the entry is very simple in the books of head office. They have to now record those assets, they have to now record those liabilities. So they will write branch assets account debit to branch account. To record branch liabilities, what will they write? They will write branch account debit to branch liabilities account. I repeat, in order to incorporate assets, it will be branch assets account debit to branch account. In order to incorporate all the liabilities, you will have to write better branch account debit to branch liabilities account. Is that clear, guys? To incorporate net profit, guys, you can directly write one single entry, that is branch account debit to profit and loss account. However, in certain questions, instead of asking you to incorporate net profit, they will ask you to incorporate the entire trading and P&L account. There were two questions that we did better. In one question, they asked us to directly incorporate net profit. In another question, they've asked us to incorporate entire trading and P&L account. So instead of writing this one single entry, branch account debit to branch P&L account, we are going to first incorporate all the debits of trading account, then incorporate all the credits of trading account, transfer gross profit from trading account to P&L account, incorporate all the debits of P&L account, incorporate all the credits of P&L account, then record net profit by transferring it to overall P&L account. So to incorporate the debit, you will write branch trading account debit to branch account. To incorporate the credit side, you will write branch account debit to branch trading account. To record gross profit beta, you're going to write branch trading account to branch P&L. To incorporate the debit of P&L beta, you'll write branch P&L account debit to branch account. After that beta, to record net profit, you'll write branch P&L account debit to overall P&L. Overall matlab beta main P&L account. These are the entries, guys. This is in place of recording net profit. Then there were one or two questions beta in which they said that the branch is not going to prepare the trading and P&L account. It is going to close all the nominal accounts by transferring them to head office. Yaad hai beta? They're only maintaining assets and liabilities. Baki pure ke pure accounts they are closing. So depending on that information, you will have to see what is to be done. Main concentration, independent branches were starting a reconciliation wale questions beta. I told you wo later wale questions usually do not come in the examination. So one day before the exam, you do not have to break your head with those lengthy questions. Clear, kids? After that beta, we moved on to foreign branches. One second, guys. All right. I already told you what is an integral foreign operation, what is a non-integral foreign operation. The accounting for integral foreign operation, guys, is exactly the same as foreign currency transactions. It is not the same as dependent branches. Accounting for integral foreign operations, guys, is exactly the same as foreign currency transactions, which means every transaction that is being undertaken by branch beta should be recorded by head office at the exchange rate prevailing as on the date of transaction. If there are any monetary items outstanding as on the balance sheet date, you will have to restate them at the exchange rate prevailing on the balance sheet date. Any non-monetary items as such, guys, will be recorded at the exchange rate that was prevailing as on the acquisition date only. The resulting foreign exchange gain or loss will be transferred to P&L account. So this is where beta we have learned how to convert foreign currency trial balance into home currency. All your P&L items, profit and loss account items, because it is not possible for you to convert at 365 different rates, what do? Convert them at average rate. Except for opening stock will be converted at opening rate, closing stock will be converted at closing rate. Goods received from head office will be recorded at the amount that is appearing in the books of head office. And then depreciation in relation to fixed assets should be recorded at the rate that is applicable to fixed assets. If there's any manager's commission, not any commission receipt, if there's any manager's commission as such beta that is directly payable at the year end, it will be converted at closing rate. Any expenditure that is arising at the end of the year beta will be directly converted at closing rate. Then when it comes to balance sheet items, beta, all monetary items will be converted at closing rate. All non-monetary items beta will be converted at the rate that is applicable to the corresponding fixed asset, whatever was the rate prevailing as on the date of acquisition. Once you convert the trial balance, guys, you will have a balancing figure in home currency. That balancing figure will become your foreign exchange gain or loss, and that is to be transferred to P&L account of branch. Are we clear, guys? If there are adjustments in relation to outstanding expenditure as such, guys, you will have to definitely incorporate that in the trial balance before converting, because that expenditure account for P&L will get converted at average rate, but for balance sheet it will get converted at closing rate. Are we clear about this? When it comes to non-integral foreign operations, guys, the principles are the same as kya beta? Integral foreign operations, except for one small thing, guys, and that one small thing, guys, is in relation to, it is as if, guys, you are acquiring the entire business as on the balance sheet date. That is why even non-monetary items will be converted at the exchange rate that is prevailing as on the balance sheet date. The resulting foreign exchange gain or loss will also include foreign exchange gain or loss beta on conversion of those non-monetary items. That is why it cannot be transferred to your profit and loss account. It will be accumulated in a separate account beta called as foreign currency translation reserve. It will stay in that reserve forever till you dispose of that non-integral foreign operation. Even if you convert non-integral foreign operation into an integral foreign operation, guys, you cannot use that FCTR balance till the date you dispose of that integral foreign operation. If there's a part disposal made, you can convert part of that amount as such beta to a free reserve. Is that clear about this, guys? समझ में आ रहा है नहीं आ रहा है? So these are the conversion rules beta that we have learned in relation to your foreign operations. Any doubt in them, guys? Alright, guys, that's the completion of branch accounting revision. कुछ ज़्यादा ही लंबा चल गया यार.